Thank you for choosing the Starkey Multifamily Podcast. I have with me Jens Nielsen. Jens has got experience in multifamily and mobile homes and even storage facilities. And he kind of started from IT and worked his way up. So we're going to kind of dive into that story and the path of how he got there. So Jens, thank you for joining us.
Thanks, Reed. I'm looking forward to the interview today.
Yeah, so let's get right started. So you were in IT with zero experience in real estate whatsoever. You said you had no experience, no family doing it, so you really had no idea. So what triggered in your mind that made you decide you wanted to get into it?
Yeah, right. What a crazy thought. But the idea was I've been working in IT for 20 some years and made good money, but I also realized that was a job, and the day I stopped working, there would be no more income. So I had over the years been thinking about what's a different way I can start making some money. And everything just looked like a new job to me, consulting or something like that. So one day I actually picked up a book on Audible about real estate investing. It just kind of came out in my feed. It's like, let me check this out. And this light bulb kind of went off. I was like, oh my God, this is the way to create, long-term income, long-term wealth that doesn't necessarily translate into a new job. And, I'm an analytical person. So I was like, well, I figured out a lot of different things in my life. I can probably figure this stuff out as well. And that was just kind of the trigger. And I really haven't looked back since. Just happened to come from that book I found.
So talk about your first deal. What did you look for and what did you end up finding and how did you work the deal?
Yeah, so I lived in southwestern Colorado in a small town, and I started looking around there, and I realized very quickly that the prices of the properties there were too high. So I started looking a little bit of single family in another small town, an hour away, and I was like, man, if I buy one single family house, I'll get a few $100s. It's not going to scale. This is just silly, right? Mm-hmm. So I called up my good friend who I knew owned some actually mobile home parks in the area. It's like, hey, how do I get started in this? And he said, well, you may want to go to a bigger city. And being in Colorado, you think Denver, but Denver is really far away. So I actually went to Albuquerque, New Mexico, where I used to live, and I got connected with a broker there. And I called him up and I said, hey, I'm just want to get started, probably buy, a 4-unit, fourplex or something, and just see where that goes. He's like, oh yeah, I like to work with new investors. And he started sending me some deals, and we found a 4-unit fourplex just a few months later. That was kind of our first purchase.
So how did you go about paying for that? Was that money from your 9-to-5 job that paid for it? And I assume you financed part of it through maybe a bank or?
Yeah, it was, I had been investing in the stock market for many years. So I had grown, portfolio in my own account. So we liquidated some of that and just paid, 25% down. I mean, the purchase price was $117,000, right? I remember it. So plus another, I think we put 20 or 30 into it with roofs and repairs and other things, So it was a relatively low barrier of entrance. So we just got a 30-year mortgage from a bank and 25% down. So we didn't have to come up with a ton of money to do that first deal, right?
Yeah. Did you manage that yourself, or did you end up getting a third-party property management?
It was 3+ hours away from where I lived, and I realized I couldn't self-manage. And I think that was a good decision because I want to be an investor. I don't want to be a kind of a mom and pop owner, right? Mm-hmm. And I think when people they buy something and they start managing it themselves, and they get so tied up in that day-to-day work that they can't really think about how to scale. I didn't want to go there. Yes, having property management costs you money, and you may not always do it the way you would, but in reality, I think that's the right approach in order if you want to scale. I mean, a lot of people have been successful in self-managing, no problem there. I just didn't want to do that.
Yeah. So you have the 4-unit that's running smoothly. And then what was your next step? Where did you go from there?
Yeah. So I found another 4 units shortly thereafter, maybe a month or two later, which was a similar purchase. But I think the next interesting step was then the 11-unit we bought like 6-7 months later, I think it was. And that was the first time we kind of got into a little bit more creative finances because we had used up some of our capital already, and I saw the same broker. He's like, hey, there's a property. And I remember it was right around Christmas, and he's like, here's a property. They offering seller financing. Let's go in there and offer pretty aggressive closing. Try to close it by the end of the year and be like kind of push them to get this done.
Mm-hmm.
And we went in and inspected the units, and we realized, man, they needed a lot more work than we had thought. And I was like, man, I don't want to put another $100,000 into this of my own money. So we negotiated a pretty good purchase price, $350, I think it was. But then the seller, seller financed it, and we had like 10 months of no payment, not even no interest, no payment on the loan. All the money that we earned went back into the property. So it just started amortizing, 10 months after closing, if you will. So that was a good way to start putting some money into that deal. And we just refinanced it like 6 months ago, pulled all our initial capital out, and got even a lower monthly payment because of lower interest rates and stuff.
Yeah.
Like that. So that was pretty awesome.
So now, at this point, have you started investing passively yet, or are you still just investing in your own stuff?
No, and actually, I did start investing passively because I had a couple of IRAs, and I learned about self-directed IRAs. So I opened a couple of those and moved some money over. Yes, I did start investing passively. I started with just some mortgage note funds because I felt like, okay, here's a shorter term, and they had a good reputation. So it was just, I think then they're paying 12% interest. No capital gain, but just interest in that money, and that worked really well in an IRA. And then I also found, I wanted to learn more about syndications, but I wanted to study it before I would invest with somebody. So that came a little bit later before I started investing passively in larger apartment syndications.
Okay. So we'll kind of intermingle those two because I think they go together, and it's important to see the order that they go in, because you can learn from doing one or the other first. So I'd be curious. So we've got the 11 unit. We've done some note investing. So you're kind of getting a little bit stronger and your momentum's going. So what is the next step in your process?
So this is where I started learning about, partnering with people and basically being able to do bigger projects through other people's money, if you will, right? So I'd spoken to my broker friend, now it became a friend of mine in Albuquerque, and said, hey, if we find a bigger deal, would you like to partner? Because I had seen, and he's an investor himself, and I had seen him buy, larger deals, said, oh, I'm partnered with so-and-so on this one. It's like, hey, I want to do the same thing. So this was a little bit later in the process, but we did find this 38 unit, also in Albuquerque, New Mexico, that we ended up partnering as a joint venture between my broker, one of his friends, and a couple of my friends too. So we went in there five ways as a JV and bought this 38 unit. That was the first time I kind of said, okay, I feel comfortable bringing other people in. I've done the underwriting. I know this deal is going to make sense. Here's an opportunity for somebody else to come along they otherwise wouldn't have, right? Mm-hmm. So that's how we started that, to just kind of get the experience of partnering with people.
So with having 5 people, did you have kind of a hierarchy? Was there, one person that kind of made the major decisions, or did you all kind of, vote, or how did you work that out?
So we have a manager that makes, there's a manager of that LLC that makes most of the decisions, to how to operate it. But we all, look over the numbers, and, if there's big ticket items we need to do, we all talk about it, make sure everybody's comfortable with it and so forth. We don't manage it by what do you call it, consensus, because we need to kind of just take action and move forward, right? So, but that's been an interesting experience. Some ups and downs in that deal, but overall, it's going okay.
What type of financing did you go with on that one?
So this was another interesting deal in the sense that we bought it for $1.2 million, 38 units. It was about 2.5 years ago now. It was not in very good shape, so it needed a lot of money. And the bank said, okay, we will lend you 50% of the purchase price, but then we'll give you a construction loan. So it's kind of like it was interesting because it was just it went from 600,000, and then let us draw another 600 over time by submitting receipts and stuff for the work that was done. So we had to bring $600,000 of equity to the deal. And now, we have spent all the construction money, so our loan is now 1.2 plus the 600 we have in, so our money in is about 1.8, and I think it's, if we got reappraised, probably appraised over 2 million now. So that's worked pretty well. But it was an interesting model, man. That bank, that came through a relationship with a local bank. Obviously, it's recourse loan, right? But the bank knew my partner, and they felt comfortable with the deal. They liked the underwriting and everything else. That's how we were able to structure that.
Yeah. So that's kind of your first big jump into the multifamily. Then you've got some taste of the fourplexes, but this is your first commercial sized deal. So what were some of the biggest challenges with that deal?
The challenge that we learned, where this was built in the in the 70s, we didn't quite, we had a big budget, we thought, for repairs or maintenance, or CapEx, I guess. We didn't realize there were some undiscovered plumbing issues in the property. So as we started rehabbing units, we started having like various plumbing issues. We ended up having to dig up the floor and cap up some old plumbing lines and replumb through like soffits and so forth. So there were unexpected expenses there. So that was one of the learning thing. And I think what I've learned from that experience, if you're going to go in and syndicate something, you want to take a property that doesn't need that really, really heavy rehab, because I think it's hard to get accurate projections on what your turns are going to look like, because suddenly cost overruns and everything else. I think it can be okay if you are joint venture and everybody's on the same page and understand the risks, but that's kind of what I feel the learning takeaway was from that deal.
Yeah, there's certain people that can pull those off. So I've met some people that just go real deep into those deals right from the get-go. Me personally, that's just not where I'm looking to be at. But it takes a certain personality to pull that off. I mean, you really got to roll your sleeves up and get into it. So, what were you thinking at that point? Were you excited to take on that big of a project? Was it maybe just not, was it bigger than you thought? Or, what made you take a big leap for that first major deal?
So one reason why I was going to partner with my property manager in the market, he was going to take care of the rehabs. I felt like he has done this many times over, and he takes these old properties and fix them up. So I felt comfortable with him doing it. Of course, if you take on people or partners or investors or whatever you call them, there's a different level of responsibility. So I did feel like a level of concern around that. And there's been some, as things weren't quite going as well for a while, there were some tough discussions about, I had to kind of say, well, here's what's going on. And, this is what we're trying to do in order to get back on track. So I think one thing is, be open and honest. And if there are problems, just talk about those problems and let your partners or investors know, because, hey, everything is projections and it doesn't always work out the way we want, right? But don't hide anything. I had a boss once that said, bad news doesn't improve with age. So make sure you just kind of keep the communication open. I think everybody appreciates that.
Yeah, I've preached that many times on this show, is that communication is imperative. It's easy to communicate when everything's going well, but nobody cares when it's going well. When there's a problem and then it goes silent is when people really start to panic. And you can keep them out of that panic by just saying, hey, we have problems, we have a plan, we're working on it. And, people are smart enough to know that problems are real, but when you don't know, your brain goes into all crazy things of where it could be or what it is. And so I agree 100% on that.
That's true, yeah.
Okay, we got the 38. That's rolling comfortably. And you've got a total of 82 now, or is that still the current figure?
So it has changed a little bit. We sold the 2 fourplexes this year and last year because I felt like they didn't really fit the portfolio anymore. So we also bought another 16. So we have another 11. So, so we have two 11 units, a 38 and a 16 in that market. Some of them are just me and my wife that owns them, and some are with some partners, right? So that's kind of our joint venture / personally held portfolio. And there's a mobile home park also, that the small mobile home park that also came into the picture there. So that's kind of all those units that we have bought over the years by ourselves. And then we've gone into, the syndications and co-sponsoring syndications. This has been kind of the next leap, right?
So tell me about that. What aspect are you doing on the syndications?
Yeah, so it started out kind of, in the co-sponsoring, help raise some equity, help doing some underwriting and the initial due diligence and so forth. On a deal in Atlanta and also in Phoenix, we did a couple of deals. But then now I've actually created a team that, interestingly enough, we invest up in Ohio and southwestern Pennsylvania. So we've done 2 deals in Erie, Pennsylvania, and we are under contract to do one in Cleveland, Ohio. Just because we have some boots on the grounds up there and we like the cash flow. And this is, now it's basically getting involved in everything, like the initial due diligence, all the underwriting, the on-site due diligence, and structuring the deal and talking to the syndication attorneys, all those things, right? So now it's becoming much more of a bigger involvement, which also helps because we get a bigger share of the deal and more cash flow and so forth.
So what would be your long-term goals? Where are you going? Where do you see yourself getting to, and what are you trying to get to?
Yeah, so I mentioned I started a little over 4 years ago, and I actually just a couple of months ago went to part-time my job. So I'm still employed, but this whole COVID thing allowed me to work from home. And I told my boss, hey, I've been working from home. Can I work only 3 days a week? And he's like, yeah, let's do that. So I'm scaling back in my W-2 job, and by March or April next year, I'll be fully out of that and fully doing the investing. And it is syndications. That's a model we're using. We are heading towards, because I think we have some good deal flow and it makes sense from hey, you can just do as many deals as you can find investors versus trying to use your own capital, which runs out, right? So that's the model. And I do some coaching too, so that's another stream of income to kind of replace my W-2. But it's been an amazing journey of being able to set a goal and then actually work towards it and actually see it now come to fruition. That's been pretty awesome.
Yeah, it's a great story. So so tell us, how can somebody get a hold of you if they need to reach out to you?
Yeah, so my email is Jens, Jens, at opendoorscapital.com. That's an S in there, opendoorscapital.com. And if anybody wants to schedule a free call, either talk about coaching or investing or anything, they can go to opendoorscapital.com/call, and there's a link to my calendar there. So I'd love to talk to anybody.
Yeah, we'll put the links down below as well, and go from there. So, well, I appreciate you coming on. That was a great story, and I wish you the best of luck, and maybe we'll have you back on to tell some of the future gains that you've built your empire with. So,
well, thanks, Reed. I appreciate it. Have a wonderful day.
all right, thank you, Jens.
Thank you.